The Bay Area housing market has been cooling off for many, many months now. But just how bad is it? Numbers might shock you. Coming up on this Silicon Valley Snapshot. Talks of an extreme economic meltdown plus rising interest rates have cooled the Bay Area housing market off significantly. But what does that actually mean in terms of data, in terms of numbers? What's actually going on in the market? Well, that is a far cry from what the news is feeding you. And that's what you're going to see right now, the actual cold hard data. You might be shocked. It might surprise you to see what's actually going on in the housing market. But before we get into the numbers and before we get into the data, if you're a home buyer in today's marketplace and you're trying to figure out how to make the best possible decision in your home buying process, you can text the word data plus the neighborhood or the area or the zip code that you're looking in, and we'll get a data set sent straight to your inbox. And if you're a home seller in today's marketplace and you're trying to figure out what should I price my property for, if I do decide to sell my home, which maybe I shouldn't even sell my home, but if I do, like, what can I expect for it? All of those things will be answered when you text the word data plus your property address to the number down below, and we'll get that information sent straight to your inbox. No floof in this one, everyone. Let's just dive straight into the numbers because there is a lot to talk about. Let's start with Santa Clara County. Now, if you've been watching this channel for a while, you'll know that back in August, we saw inventory levels come down fairly significantly around the Bay Area, at least in most counties. And we saw pending activity come back up from the summer slump that we were experiencing. And so what we saw was a slight turn, a slight shift in the market, a positive shift in the market. Well, that has cooled off since then, and definitely rates have gone up and more talks of an economic recession have ramped up. Well, if we look at the numbers here in Santa Clara County for September, we are seeing pending sales coming down to 880 pending versus 1,260 homes on the market. So we're seeing pending sales come down. We're also seeing inventory levels come down, but not as significantly. So that delta, that gap has widened month over month. Coming on up to San Mateo County, we see 659 homes on the market right now and 354 homes pending. Barely an increase in inventory from August into September, but we did see pending sales drop fairly significantly from 434 to 354. So again, we're seeing that delta widen. So both in Santa Clara County and San Mateo County, what we're seeing in real time, that what the data is showing us at least, is that we are seeing softer market conditions right now from August into September. When generally speaking, what we tend to see is market conditions get a little bit more aggressive during the fall months. During fall and September, October, and into early November, we start to see an uptick in activity typically, and we start to see a downtick sometimes in inventory levels, but that's not the case this year. Now, this is definitely a trend in the wrong direction if you're a home seller and a trend in the right direction if you're a home buyer. But there is some silver lining that I'm going to be covering at the end of this. So if you think you've seen enough and you think you've seen it all, you have not seen it all. So stay until the end of the video because I'm going to get into some good news if you're a home seller and some things to be aware of and just context for you, especially if you're a home buyer as well. Now let's head on down to San Benito County. In San Benito County, what we're seeing is just an extraordinary amount of inventory when we compare it to last year at this time. We're seeing 111 homes for sale on the market right now and 41 homes pending. Now, month over month, what we've experienced is a downtick in inventory levels and pending activity as well, which basically means that month over month, we're basically seeing practically similar market conditions in San Benito County. Now, flipping on over to Santa Cruz County. In Santa Cruz, we saw 282 homes on the market and 137 homes pending. Month over month, we are seeing a downtick in pending activity. Not a huge downtick, but definitely a significant one. Basically the same amount of inventory. So again, the market conditions have softened ever so slightly, but it is something to pay attention to, and definitely something that in every county that we've seen so far, we want to continue to pay attention to those trends, especially in activity levels, because that seems to be what is dictating the market conditions right now. It's not necessarily inventory, but it's how many homes are pending, which again equates to buyer demand. And by the way, it makes total sense why buyer demand is down right now. Let's face it, interest rates have come up significantly over the last 6 months. I mean, we're talking almost a doubling in interest rates over the last 6 months. That is nothing to sneeze at, and absolutely puts pressure on buyers, it puts pressure on demand, and ultimately that translates to pressure on prices. Downwards pressure. Now let's head on up to San Francisco, and we are definitely seeing a widening in the gap from pending to inventory levels, meaning we're seeing a significant softening in the market month over month in San Francisco. We had 1,221 homes on the market in San Francisco versus 351 homes pending. Now, when you compare that to month, the pending activity is negligible. The increase in pending activity is negligible. But what is not negligible, what is absolutely obvious to anyone looking at this chart, is the drastic increase in inventory month over month. Now, if you look at the year over year data, you look at last August to September, we also saw a sharp increase in inventory. But this is an even bigger increase in inventory levels. And if you notice, from August to September of last year, we saw a big increase in pending activity. This year, not so much. So while pending activity last year kept up at least a little bit with the increase in inventory levels, we did not see the same thing this year, which simply means the market conditions last year, while they softened month over month, this year they've almost like double softened, right? Because you didn't get any sort of increase in pending activity and you got this huge increase in inventory levels as well. This is not uncommon, by the way. We've seen over the last several years, last 5 years, at least in recent memory that I can think of here in San Francisco, where we've experienced a sharp increase in inventory levels and a softening in the market conditions, specifically in the fall. So the sharp increase in inventory levels is definitely a seasonality. There is a seasonality effect in the market that has been there for quite some time in the city. But what is definitely notable is the lack of pending activity that usually jumps up with it. So tough to know exactly what's going on in the market right now in San Francisco, but you can bet that we're going to keep you up to date every step of the way as we see what unfolds here in the fall and winter months in San Francisco and all over the Bay Area. Now, heading on over to Contra, Costa County, we saw inventory levels at 1,440 and pending activity at 806 homes pending. Now, look, again, negligible increase or negligible movement on the inventory side of things month over month, but a apparent decrease in pending activity month over month. Again, the same story, at least very similar story to what we're seeing in other parts of the Bay Area when it comes to almost negligible movement on the inventory side of things, but pending sales definitely coming down a significant amount, at least not an insignificant amount, but definitely something to pay attention to, because if this trend continues and we start to see pending activity go down and down and down even more, that is definitely going to put even more downwards pressure on prices, even more so than we're already experiencing in this moment. And then finally, in Alameda County, if you look at the inventory levels, where again, very negligible movement in Alameda County month over month on the inventory side of things, and a fairly significant decrease in pending activity of roughly a 15% swing in pending activity month over month, from 993 homes to 829 homes pending in September. So again, what does this mean? Well, it just means that it's something to pay attention to. Obviously, there is less demand right now. And if that trend continues and we start to see inventory levels either go up, stay the same, or not come down in unison with the pending activity, then we could see even more pressure on prices than we are already seeing. Now, while this definitely looks like the makings or the beginning of another epitaph that we experienced like we did in the summer, where like all of a sudden like prices were coming down and we were getting a lot of reductions and days on market increased. And while I certainly believe that we are going to continue to experience that for a good long while, meaning I believe that we're in it for the next 12, 18, 24 months, we're going to continue to see this adjusting market where we see ups and downs, where we see the pending activity and the inventory levels get closer and closer, and then wider and wider, closer and closer, wider and wider. And so just to put everything in perspective, what I went ahead and did was I pulled all of the aggregated MLS listings data, which covers San Mateo County, Santa Clara County, San Benito County, Santa Cruz, Monterey County. Now, we could do the same thing for Alameda and Contra Costa. We could do the same thing for Solana County up in that area as well. We could do Marin and we could do Napa. We could do all of the counties, and they would look fairly similar to what I'm about to show you. So you can just use this as like a generalization of what's going on in the entire Bay Area, because this is aggregated data for 5 different counties here in the Bay. And so this is what's going on right now today. So 3,372 homes on the market and 1,828 homes pending. Now, when you compare that to last month, obviously you saw that delta was closer in August, and then it widened again in September. Now, when we look at what happened in July, we see that delta is even greater. Okay, so are the market conditions right now in September as brutal as they were in July? The answer is no. All right. So even in a short historical context, and if you look at all the other numbers that we've shared today, you'll notice a similar trend that July was definitely the month where things kind of got out of hand and then kind of came back forward. But even in a short historical time frame or time period, things are balancing out, but they definitely are not getting more out of control than they already have been. So the control is still there. It's still not out of whack. We're still not experiencing like crazy numbers where I would be seriously concerned. Now let's look at the last 5 years. And again, this is for MLS listings data. So what I want to do is just look historically at what has happened here in the Bay Area. Now, if you look here in September of 2022, we see, a fairly significant gap between inventory levels and pending activity. But let's look back at, say, May through October of 2019. The percentage difference, the delta gap between inventory levels and pending activities is either similar to or outpaces, meaning is greater than the gap that we're seeing right now between inventory levels and pending activity. Meaning the market conditions right now are not even as bad or not even as brutal as they were in 2019. Now let's look at 2018. Same story. From July all the way through November, December of that year, we're seeing very similar market conditions as we're seeing right now. In fact, I would argue that even in 2018, it was a little bit more brutal than it is right now. But I want you to observe something it's really the inventory levels right now that are under control. It's the inventory levels right now that are under control. So if inventory levels start to go up and pendings don't follow suit, we could definitely see the market turn even more so than it already has. But here's where history really is going to teach all of us here a lesson. We're sitting here. It's 2022. We're looking at everything going on right now. We're like, wow, the market's crashing. Everything's terrible. The economy sucks. What's going to happen next? Well, a lot of people are saying, oh, it's like 2007, 2008, 2009 all over again. In fact, I've heard a lot of people come into our open houses. I've had agents on my team tell me, Danny, hey, people are telling me it's all like 2007, 2008, 2009 again. Could not be further from the truth. And here's the data to demonstrate that this is not the case whatsoever. Let's look back at the last 15 years, quarter per quarter. What you see here is a fraction of the inventory right now is on the market in comparison to what it was in 07, 08, and 09, and even into 2010 and 2011 as well. So what's going on here right now? What are we seeing? Well, what we're seeing is history showing us what a true market crash actually looks like. I want everyone to observe something. What pending activity does on a yearly basis is practically all the same, meaning year over year, we practically see the same amount of homes absorbed every single year with very little fluctuation. And I suppose that this year that we'll be down, we'll be kind of on the lower end of things. But when we look at every single year, we look at the activity levels, what we're seeing here is pending activity in 2022 is still above what it was in 2007. And inventory levels are at less than 25% than what they were in 2007 and 2008. So the next time someone at the water cooler tells you that the market is crashing, show them this graph and show them what a real market housing crash actually looks like from a data perspective and a data standpoint. The data simply does not support that the market looks like exactly what it did in 2007, 2008, 2009. You can see what the market looked like. The data doesn't lie. Stats don't lie, but the media does. Because if they don't lie, they don't sell papers. This is Danny Gould, everyone. I'm selling Silicon Valley, and I will catch all of you in the next video.